All right, let's talk silver. If you want in on the action, you have a huge choice to make. Should you own the actual physical metal itself, or should you buy stock in the companies that dig it out of the ground? Today, we're going to break down that exact question, comparing two very different strategies for investing in silver. So let's get right into it, because this isn't just about picking a ticker symbol, right? We're talking about two totally different ways of thinking about investing. One is all about playing defense, about preserving your wealth. The other is pure offense, a play for leveraged growth. And here's that split laid out nice and simple. On one side, you've got direct ownership. That's about holding a real, tangible asset. On the other side, you're buying stocks in mining companies. That's a bet on how well a business is run and how profitable it can be. Two very different things. First up, let's talk about that safe haven philosophy. This is for all of you who want to own the real deal, the actual metal, which you can do pretty easily through these specialized physical trusts. And the poster child for this approach? It's got to be the Sprott Physical Silver Trust, or PSLV. Its job is incredibly simple. It buys up those huge investment-grade silver bars and locks them away in a secure vault. That's it. The whole point is to give you a pure, direct claim on the metal, stripping away all the drama of the mining business. So who is this really for? Well, this is your classic risk-averse play. You're basically saying, I want the silver, but I don't want any of the mining company drama. Things like labor strikes, political chaos, or a geologist getting the numbers wrong. You sidestep all of it. You're not buying a company, you're just owning the metal. And this is where something like PSLV really shines. It's built for those moments when the whole financial system starts to look a little shaky. When inflation is running hot, it's a way to protect your purchasing power. And if there's ever a real crisis of confidence in regular currencies, well, that's when tangible assets like silver can become the ultimate security blanket. Now, sticking with that same idea of safety, you've also got the Sprott Physical Gold and Silver Trust, CEF. As the name suggests, this one isn't just about silver. It holds both gold and silver, giving you a sort of precious metals 1-2 punch all in one investment. So why do this? Well, it's for anyone who doesn't want to choose. You get the rock-solid stability that gold is famous for, and you pair it with silver's potential for more explosive moves. And yeah, its volatility too. It's like getting the best of both worlds in one balanced package. Okay, time for a complete 180. We're shifting gears from that defensive, hold-the-metal mindset to the much more aggressive, offensive strategy, owning the miners. And this is all about two words, growth and leverage. Now, this word leverage gets thrown around a lot, but what does it actually mean when we're talking about a mining stock? This is maybe the most crucial thing to understand in this whole comparison, so let's break it down. Okay, check this out. It's actually pretty simple. Imagine a miner's costs are more or less fixed, right? Let's say it costs them $15 to pull an ounce of silver out of the ground. Now, if the price of silver goes up by just 10%, that entire increase drops straight to their profit line. Their profit margin doesn't just go up a little bit, it explodes. And that's why the stock price can shoot up way, way more than the metals price did. So, our first example on the miner side is the Sprott Silver Miners and Physical Silver ETF, ticker SLVR. And this one's a really interesting hybrid. It's mostly invested in a bunch of silver mining stocks, but, and this is the key part, it also holds a chunk of physical silver. It's kind of like having a built-in shock absorber to smooth out the bumps. So who's the perfect fit for SLVR? It's for the investor who's definitely chasing that growth, who wants that miner leverage, but who's also a little cautious. You want the potential for big returns, but you also want a bit of a safety net from the physical metal to kind of cushion the blows. All right, next we have the Sprott Active Gold and Silver Miners ETF, or GBUG. And if there's one word you need to remember here, it's active. See, unlike SLVR, which just buys whatever stocks are in an index, GBUG has actual human portfolio managers making calls and handpicking the stocks they think are the best. And this quote right here just nails the whole argument for active management. The mining industry can be a minefield, pun intended. You've got amazing world-class companies, and you've got absolute duds. An index fund has to own the good, the bad, and the ugly. An active manager gets to say, nope, I only want the best in class. So GBGU is definitely for a more sophisticated investor. It's for someone who believes that a team of experts can actually beat the market. You're betting that their research and their stock picking skills can deliver what's called alpha. That is, returns that are better than just buying the whole sector. All right, that was a lot. We've looked at 2 very different philosophies and 4 distinct ways to play them. So let's put them all on one page and see how they stack up head to head. And this table just lays it all out, doesn't it? Over on the left with PSLV and CEF, your main risk is just the price of silver going up or down. It's all about wealth preservation. But as you move over to the right to SLVR and GBU, the whole game changes. Now your risks are about the business of mining, but your goal shifts from preservation to aggressive growth. So, after seeing all that, the million-dollar question comes back to you. What's your strategy? Because there's no single right answer here. It all comes down to what you're trying to achieve and, frankly, how much risk you can stomach. So ask yourself this, is your number one goal to protect your capital and just own the metal, plain and simple? If you're nodding your head yes right now, then you're squarely in the safe haven camp. That probably means you're looking at PSLV for a pure silver play or CEF if you want that gold-silver mix. But maybe this sounds more like you. Are you really trying to maximize your returns? Are you comfortable taking on the risks that come with running a complex mining operation for the chance at that leveraged growth? If that's your goal, then you're playing offense, and that points you toward the equity ETFs. SLVR for a broad buffered approach, or GBUG if you trust the experts to pick the winners. And really, that's what it all boils down to. It's the ultimate question for your portfolio. Are you building a fortress, or are you launching a rocket? The physical metal is your fortress, built to weather any storm. The miners, well, that's your rocket, aiming for the moon. But you better be ready for a bumpy ride. The right strategy is the one that fits your mission.